Hey everyone, Frank Chen here with REIClub.com, the only site you'll need as a real estate investor. In today's quick video, we're going to talk about the many types of commercial real estate and some of the quick benefits to each. Now, outside of your apartments, self-storage, office buildings, warehouses, I've included 9 major commercial real estate niches in the description below. But what I really want to focus on, guys, is the difference between commercial versus versus residential properties. So I've covered some of the major differences, and the first thing I want to talk about is the valuation. What determines the property value for a residential property? Well, the land and the property itself. What kind of updates, appliances, the property itself determine the purchase value. Now, what determines the rent is the fair market rent of the area. What's the average rent? That's what you're able to charge. Now, for commercial real estate, what determines the purchase price is the income potential. What are you making per month? What are you making per year? This can definitely change, have huge swings. What determines the rent for commercial properties? Well, it determines by the dollars per square foot per unit, okay? And these numbers can actually change based on demand versus supply. So if there's a high demand for whatever it is that you're trying to open, but there's a low supply, these numbers can be significantly raised, okay? Now let's talk about the financing. Typically for residential properties, you're putting down a smaller deposit, and you can actually qualify for 100% of a loan to purchase a property. Also, you're experiencing lower interest rates, but it's not as easy to qualify for seller financing. Now, for commercial properties, you're typically putting about 30% down of the asking price, which can be a significant chunk of change. And you're looking at higher interest rates, but there's a better chance for you to leverage your loan. So you can actually qualify for seller financing, and you can be using other people's money, which means you don't have to use banks, and credit is not as big as a factor, okay? Now, the rental commitment, let's talk about residential properties. Typically, you see is 1 year with the option to renew, and your tenant quality actually do fluctuate. You get some good ones, you get some bad ones, and your vacancy typically do hurt you on the month to month. Now, for commercial properties, you have longer lease periods, typically 3 to 20 years, and you get annual rent increases. You're going to have better tenants because they're running businesses, and you're going to have a lot more flexibility with vacancies, especially if you have units already filled. Now let's talk about the management. Residential properties, most of the time you are the manager. It's going to be very time consuming, and typically we don't really budget for a management company. Now for commercial properties, property management expenses are actually built into the valuation of the property. So professional companies can be hired to take care of your properties, and you can take yourself out of the equation, okay? It saves you a lot of time. Now, what are the typical costs? The best way to kind of paint that picture for you guys is the cost per door. Say, for example, a 20-unit multifamily is significantly less than the average cost of, say, 20 single-family homes. And the best way to kind of simplify that is you have 20 rooms under one roof versus 20 individual roofs, okay? So that kind of gives you a better picture. Now, let's talk about the benefits. There's huge income potential in commercial real estate, and you have high rates of return. Also, there's a lot longer lease periods, okay? So 3 to 20 years, I said before. Rent increases are built into the agreement with the tenant. And there's numerous tax benefits, such as your 1031 exchanges, okay, or tax-deferred 1031 exchanges. Sellers can be a lot more flexible in the pricing and financing options when it comes to you wanting to purchase their complex or unit or whatever. Now, a lot of the expenses are paid by the tenant, and it's called triple net. I do encourage you to look that up. It's very, very commonly used in commercial real estate, and there's really high appreciation potential, okay? Now let's talk about some of the disadvantages. Well, the real obvious fact is that there's a lot more risk when it comes to commercial versus residential, okay? There's a lot more to learn, and it actually ties up a lot of your initial capital, which takes a significant amount of time to make back. Also, the downturn in the economy can have much bigger effects on commercial than it does residential, and the mechanics of purchasing are more complicated, okay? And the legalities actually are different from state to state and city to city. So what may work in Texas may not work in California, which may not work in Florida, New York. So you have to kind of brush up on these laws when you're deciding to do commercial real estate in these areas, okay? So there's a lot to learn. Now, as you can see, guys, there's tons of ways to get involved with commercial real estate investing, but it's not for everyone, okay? It takes an experienced experienced real estate investor and the right financial backing in order to even get involved with commercial real estate. Now, the risks are higher, but the payouts are too. So always make sure that you can handle the time and the cost associated with commercial real estate. And if you happen to be new to it, you're about to start, I highly do recommend you looking into getting a mentor, okay? Now, again, guys, this is Frank Chen with REIClub.com. Do me a favor, please leave comments below about what you thought about the video, as well as click the like button, because it really does help us out. Also, most importantly, please subscribe to our YouTube channel so we can keep you informed of when new videos are posted. As usual, guys, thank you so much for your time. I look forward to talking to you next week. Take care, good investing, and bye-bye.